The best performing sector of the year had one of its worst days in a while. After hitting a record early in the day, the mood shifted suddenly and without warning. And those same stocks that accounted for more than 40% of the S&P 500's advance this year reversed course. By the end of the day, Amazon, Facebook, Alphabet, Apple, and Netflix all lost 3% or more. In the end, it was a tale of two markets. The Dow Jones Industrial Average closed at a record, up 89 points to 21,271. The Nasdaq lost 113 points, and the S&P 500 was off too. Bob Pisani takes a look at the hit the tech stocks took.
Finally, we got a little volatility as some traders came forward to begin to question the valuation of some of these big tech names. So Facebook and Amazon and Apple and Microsoft and Alphabet, they were down about 3 to 5% today. Goldman Sachs, in a note this morning, made a very simple but important point. These big tech names are traditionally cyclical growth stocks. In other words, they're volatile. But everyone has been acting like they're boring consumer staple stocks, which is usually not volatile. And everyone has bought them aggressively, assuming they would keep going up with no risk at all. They warned that the stocks have gone up so much that the trend could quickly reverse. And they're right. It's a good point. And in fact, that's exactly what happened today to all these big names, as well as some of the big semiconductor names that have also had big run-ups. For example, NVIDIA and Advanced Micro. So what does all of this mean? Well, it means kind of what it always means on Wall Street. When you have stocks that keep going up, it attracts a whole other class of buyers. We call them momentum players. And essentially these momentum players are just along for the ride. Then something fundamental happens. You have the mildest of earnings or guidance disappointments. Or in this case, someone with influence like Goldman Sachs writes something that says, you know, fellas, this doesn't make too much sense. And you get a sell-off that suddenly accelerates. All right, so is this a cause for concern? For the moment, no. I think it's a relief. There are some signs traders are taking the money and buying less loved sectors like banks and energy stocks. That would be a healthy rotation, using overbought tech stocks as a source of funds to buy underowned bank and energy names. So the verdict so far, at least, is for the moment, this does not appear to be the start of an overall correction. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.